Our third engagement will be a full-blown financial statement audit. A financial statement audit offers the highest level of assurance. Of the three reports discussed, the auditors will obtain reasonable assurance that the financial statements are free of material misstatements, aka the financial statements are presented fairly. With an audit is way more involved than a compilation or review. Audit will have procedures such as testing the internal controls, making sure the segregation of duties is in place. They'll be testing access to certain systems, review the authorization of those who have access to systems. With an audit, you want to validate the internal controls are effective and are in place. You also want to assess the risk of fraud. Is there fraud happening? Is there any indications that fraud could happen? You want to document those and assess whether there is a risk of fraud. You also perform analytical procedures like you did with a review. Also make inquiries with management just like you did with a review. But you will also go into sampling documentation to support amounts shown in the financial statements. You're going to pull a list within the general ledger account, select 10, 15, 30 items, and you want to pull the support to validate that that information is correct, and you can provide the support that justifies the number in the general ledger. You also confirm balances with third parties. This would be bank confirmations, maybe legal fee confirmations where you actually send it to the vendor and they come back and validate the numbers and the information that you provided during the audit. In addition, you'll make observations of fixed asset, physical inventories. You'll go out and make sure that these companies actually have these items or they have this inventory. Heck, you might even do inventory counts. Audit, that is just a general sense of what audit procedures can be during a financial statement audit. If you've gotten any value out of this video so far, please smash that like button and consider subscribing. During the fieldwork phase of the audit, auditors will be on site of the company performing audit procedures and gathering documentation. Now, auditors can be there as long as a couple weeks or maybe months, depending the complexity and the level of audit that is being performed. After fieldwork, the auditors will draft the audited financial statements and provide their opinion. Audit letter opinions come in 4 flavors. There's one particular flavor that you want when you're getting a financial statement audit. So let's look at an audit opinion letter and see exactly what it says. What are the key aspects of the audit opinion? 1, presented fairly in all material respects. Let's talk about materiality real quick. This means the auditors believe that they are reasonably sure a material misstatement is not in the financial statements. And to go over materiality, let's say you have a company with 100 million of revenue. If they mispost $10,000, that more than likely is not going to be material to the audit. However, if the company misposts $5 million, that would most likely be material to the financial statement audit. This is where you get into this concept of materiality. Materiality just means, is the misstatement going to change the opinion of the financial statement reader? 2, they've conducted the audit within the generally accepted auditing standards framework. This is GAAS, G-A-A-S, generally accepted auditing standards. There's a whole list of standards that are written out. You can see how to conduct a audit. Audit evidence was sufficient to form an opinion. All the evidence provided during the audit was valid. It tied to the general ledger. You feel good about the evidence the company provide. Reasonable assurance is provided there is not a material misstatement in the financial. Reasonable assurance is not a guarantee. It basically means how we conducted the audit was very reasonable. We felt good about what was provided, but that does not mean there isn't a material misstatement or there was something that possibly could have been missed in the audit. And here there's further discussion on what a material misstatement means and what it could do to the financial statements. Now we started talking about audit opinion letters. So what are the 4 audit opinions that an auditor can issue when conducting a financial statement audit? 1 is you definitely want. There's another one that's it's not great, but you can live with. But there's 2 you definitely do not want that audit opinion when issuing financial statements. The first one is a unqualified opinion. This is the opinion you want. This means you have had a clean audit and the auditor believes your financial statements are presented fairly. Qualified opinion. A material misstatement was found and is documented, but the material misstatement is not found throughout the financial statement. Not a great audit opinion, but you can kind of live with a qualified. You really don't want a qualified opinion, but it's not the end of the world if you issue a qualified opinion, and maybe there's an accounting treatment that you just disagree with the auditors, but they will not give you a unqualified opinion. Ultimately, you want to get to an unqualified opinion, but qualified isn't the death blow these other two are. Adverse opinion. This is not an opinion you want. This is basically your financial statements are full of material misstatements and should not be relied upon. This is the worst. These next two are terrible to get, and basically your financial statements should not be relied upon, and that's not going to go well for anyone reading the financial statements. They're going to have zero confidence in your financials. Disclaimer opinion. The auditor could not obtain sufficient evidence to form an opinion. This is also not a desirable opinion to get. Basically, the auditor could not substantiate or gain information, evidence to support your financial statements, and is issuing a disclaimer opinion it's probably not as bad as an adverse opinion, but it's right there with an adverse opinion. Anyone with a disclaimer opinion, there's not a lot of confidence in those financial statements with a disclaimer opinion. Ultimately, your audience wants to see an unqualified audit opinion, the clean audit opinion. What does an audit cost? It's going to be the most expensive of the three engagements that we just talked. There's a lot more testing, proving, a lot more that goes into an audit compared to a review or a compilation. You could have auditors at your company for a couple of months if you have a very sophisticated, complex audit. Audits are expensive. They will range with the size of your company and the complexity. They're not a cheap engagement to go through. How long does an audit take? An audit, maybe you can get done in a couple of weeks if you have a small audit that you're trying to get through, but more than likely you're a month, maybe a couple months to get through an audit. And if you're a large company, you might have auditors in your place, 6 months out of the year. It really depends on the size of your company, the complexity, but I would say at minimum, you're looking at 3 weeks to a month to get through a financial statement audit, from fieldwork to actually preparing and issuing the financial statements.